Replacement cost is the amount it would cost to rebuild your house. And since insurance covers rebuilding your house in the case of a claim, that is how we calculate your insurance. We basically determine how much it would cost to rebuild your house from the ground up, and that is what we insure your house for. Property values are only market value. It includes the cost of the land if you were to buy land and the cost of the home on the land. I think it's important to have a good understanding that there is a major difference between the two, and understanding that what you buy your house for isn't necessarily what you would build a house for. If you were to buy land and then build a house and then have a real estate agent appraise that house, you would have 3 different values altogether. So it's important to understand the difference between those things. There are some safeguards on the insurance policy that automatically increase your replacement cost valuation every single year to keep up with inflation, and typically that's about 4%. It's a good idea to look at your replacement costs on your policy. How much dwelling coverage do you have? And if it sounds low to you or looks low to you, have your insurance agent, us, review that for you. We typically like to do this every few years anyway, but there are times when even you can look at it and say, wait a minute, this seems really low. I don't think we could rebuild our house for this amount. We should really take a look at this. Now, when we're doing replacement cost valuations, we are seeing a bit of an increase. But again, the software is typically not as up to date as the store's prices. So we do the best that we can, but we implement safeguards in the policy to make sure that someone will have the coverage that they need if something were to happen. Things like guaranteed replacement cost or additional replacement cost, so that you're not stuck with an additional cost if something were to happen.